Got that rand weakening all the way above R7 again this morning, so back around the R7.4, R7.5 level. We've also seen the euro coming under pressure, and it looks like Ireland's problems aren't ironed out just yet.
Good morning, Stephen. Yes, indeed. I think those sovereign debt concerns in Europe have re-emerged and are taking grip of sentiment within the Eurozone, and that's why the dollar is strengthening basically across the board. So it seems like the market focus has shifted once again. Remember in midway through this year, everyone was concerned about Greece. Then the Greece problem was addressed. We all turned our focus on quantitative easing in the States and possible double dip scenarios playing out in the US. But that now also seems to have been forgotten, and we've shifted back to Europe, where high debt concerns remain the focus. Once again, this time it's Ireland. So even though it seems as Ireland is going to accept that bailout package, there's fears that there could be more of those countries in the firing line in terms of debt burdens. Portugal, Spain are the two that come to mind. And it's really that contagion fears that is causing the euro to weaken, and as a result causing the rand to weaken against the dollar, because we've seen for a number of weeks now the rand has tracked that euro dollar cross very, very closely, and that has really continued. We had, of course, the interest rate meeting last week, and there was a little bit of a change in focus there, but it's back to that euro dollar play once again.
Of course, the focus in South Africa today really on those third quarter growth numbers coming out around 11:30. Centre Bank still expecting a slightly higher than consensus growth for the third quarter?
Yes, Stephen, our dartboard suggests that we're probably going to get 3.6% versus the consensus, so a little bit higher than what the rest of the market is penciling in. But we believe that the retail sector has shown signs of improvement. Of course, we got a nice boost in the World Cup, and that seems to have followed through somewhat. Maybe some base effects coming in there as well, but retail and consumption side should be relatively buoyant or improving. And then the mining sector also has shown a bit of a rebound. So those are the two sectors that we think are going to dominate and outweigh the downtrodden performance in the manufacturing sector, because we know that the manufacturing sector has been under pressure. Finance sector also been a bit under pressure. Those are the heavyweights within the GDP basket. But we really think the boost is going to come from the retail and the mining sector.
How does your growth outlook tie in with the SARB's leading indicator for September, which was released yesterday, and month on month a pretty good increase of 0.8%, and that's after a 0.1% increase in August?
Well, exactly, Stephen. I think the message here is that our recovery in South Africa is starting to take root. We've had a lot of interest rate cuts. The rand has been strong, and that's unfortunately hurt some of our export sector. But on the other hand, it's also promoted cheaper imports for other sectors. And generally, the infrastructure spending that we have been rolling out for the past sort of 3 to 5 years in earnest is maybe also starting to pay a bit of dividends if one thinks of the roads and things like that. So bottom line here is that we think that growth is on the recovery path, and as a result, we don't think that the Reserve Bank is going to need to cut interest rates again. Our latest interest rate view forecast hasn't really changed much from what we had prior to the November MPC, and that is that interest rates will probably remain flat throughout 2011, and we'll only probably start seeing interest rate hikes in 2012. But nonetheless, we think the cutting cycle is over, and it's partly because growth is on the recovery path, and partly because inflation looks fairly well contained.
And do you think the CPI reading that we get tomorrow will show that inflation has turned the corner from that 3.2% reading we had for September?
Stephen, I think it will. I think we have probably bottomed out in terms of consumer price inflation. But, inflation is still, in our opinion, going to remain below 5% right out until 2013. Of course, the risk to that factor is the currency. If the rand had to start to weaken sharply, which is not our base case scenario, we're expecting moderate rand depreciation, then maybe the inflation forecast could look a little bit more hazardous. But at this stage of the game, inflation well below that 6% ceiling, and as a result, even though the turn might be upon us already, I don't think it's anything to worry about.